Long-Term Eurozone Investment Outlook by www.profitableinvestingtips.com. The Eurozone may or may not be digging itself out of its sovereign debt crisis. What is the long-term Eurozone investment outlook? And what factors besides sovereign debt will affect the long-term Eurozone investment outlook? With thoughts about the best places on earth to invest in mind, we would like to look at Germany, by far the largest economy in Europe. Economically, the USA and EU as a whole rank 1 and 2. These two leading economies are followed by China and Japan. Germany by itself would rank number 5, followed by France, the UK, Brazil, Italy, and India. Germany accounts for a third of the EU total GDP, $3,397,562 million, versus $16,242,256 million for the EU as a whole, according to 2010 IMF figures. Thus, a look at Germany may give us a hint as to long-term Eurozone investment outlook. In Germany's favor are a highly skilled labor force and strong cultural work ethic. The nation is a leader in exports of complex machinery, chemical equipment, and vehicles. A drawback for Germany, as well as much of the EU, is demographic. Germany has a low fertility rate and immigration is slowing down. Thus, the nation is becoming top-heavy with retirees and seeing increased pressure on its social welfare system. Also, Germany is often seen as the paymaster of Europe as its largest economy. This can become a drag on the German economy as the Eurozone increases its lending limit again. Although Germany is commonly thought of as an exporter of goods, such as the Mercedes Benz and BMW, its economy is heavily weighted to services at 71% versus 28.1% industry, according to 2010 figures. The nation has 43 million workers as of 2011. However, the demographic demon may be a problem here as more and more Germans take well-deserved retirement. There is an employment reserve among the unemployed, with an unemployment rate that stands at around 7%. The ability of the vaunted German industrial machine to find, train, and retain skilled workers may be critical for the German subset of the long-term Eurozone investment outlook. Over time, the best stock investing tips for German companies may have to do with company-by-company technical and fundamental analysis, and not with German stock indexes. Long-term Eurozone investment outlook outside of Germany runs from lukewarm to frightening. Spain is dealing with 25% unemployment, and Greece expects to see a shrinking economy as it suffers from severe austerity measures imposed as a price for the latest debt rescue. The Greek financial collapse was averted at the last minute, but the fact that the EU is already increasing its lending limits has many concerned that a year or so from now, the Eurozone will be at risk again of a domino effect series of financial defaults. As usual, we are not suggesting investment in Europe or that an investor should avoid opportunity on the continent. Rather, we offer this discourse as an example of thinking through possible investments over the long term. For more insights and useful information regarding investments and investing, visit www.profitableinvestingtips.com.